Well, February natural gas futures are slipping on Wednesday after an early push higher lost momentum. Prices briefly touched $3.97 before rolling over to $3.73, dropping the contract back into a key decision area. The mood is cautious rather than fearful. Traders are watching to see if real buyers show up here, or if the move was just another short covering bounce. The so-called Widowmaker March-April spread briefly flipped into contango earlier this week, taking some of the late winter supply fear off the table. Warmer December weather and strong production have steadily eroded the winter risk premium, leaving supply looking comfortable for now. That stands in sharp contrast to Tuesday's action in January futures. The contract ripped more than 11% on aggressive short covering after colder East Coast forecasts hit. That surge was driven by positioning in near-term weather, not by any meaningful change in the underlying supply picture. Meanwhile, production remains robust. U.S. output is hovering near record levels, while demand continues to trail last year's pace. Storage is still comfortable based on recent EIA data, and Baker Hughes rig counts are holding near multi-year highs. Weather models are still leaning warmer overall, even after a brief colder signal showed up on the December 29 to January 2 maps. That short-lived cold shot hasn't been enough to change the broader outlook. As a result, traders are likely to stay cautious and wait for the next round of forecast updates on Monday, especially with positioning influenced by the long holiday weekend. From a technical standpoint, February natural gas is sitting at a clear fork in the road. Even if buyers manage to defend this pullback, February still faces a tough climb on the upside. The first major hurdle sits at the 50-day moving average near $4.15, followed by a longer-term pivot around $4.25 and the 200-day moving average near $4.37. Those zones have repeatedly drawn selling pressure and remain key tests for any sustained rally. As long as prices hold above $3.75, a higher-low structure remains intact and keeps the door open for another push higher. But a clean break below that level would undermine the bullish setup and likely bring $3.45 back into focus rather quickly. If you enjoyed the analysis, drop a comment, hit like and consider supporting the channel. It really helps keep things moving, and see you next time.